Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend Gary Wagner, the editor of goldforecast.com. So, Gary, how are you?
I'm doing great. Thank you so much for having me.
Yeah, it's always a pleasure having you on. So, Gary, silver and gold, they have seen an interesting breakout this past couple of months. And in your opinion, has precious metals sniffed out a 2023 Fed pivot? What are you thinking?
It's a very good question, and it's interesting. I don't think that we're going to see a 2023 Fed pivot, first of all. So I have to start with that disclaimer.
Hmm.
If you mean by a Fed pivot is they've raised interest rates to the high level that they want to and are now going to begin to decompress or ratchet down rates, if that's what you're calling a pivot,
Right.
according to everything that they've said, and which brings up a whole other can of worm, whether the Federal Reserve will do what they said they would do. What
Hmm.
they said that they would do is get it to close to 5%. We're just shy of that now at 4.25 to 4.5, and maintain it through the entire year. So there is really possibly a high probability there will not be a Fed pivot until 2024 Q1 or 2. I think what we have been seeing, and we have to put this all into context,
Right.
the precious metals ran really, really hard at the beginning of last year. Pandemic is done with. There's a recession, a recovery that's going on. We saw gold challenge the record high of 2088, coming in at 2077
Hmm.
in March. And then we saw silver run to recent highs right around $30. From March up until November, in gold, in silver a little bit earlier, they tended to bottom. So what silver went to a low of about $11, gold went to 1621, and then both those metals shot up. One. Two, when they shot up, silver disconnected itself from gold in that its performance and percentage gains were much, much greater than we saw in gold,
Right.
which of course would generate interest with all of your followers. But the fact of the matter is, in terms of a percentage gain, silver did almost twice as much as gold did, and both of them had superlative Q4 performances this year. So, for example, in gold, we saw, I believe it was about a 10% rise from November up to these highs, maybe a little higher. Silver was 22%
Hmm.
from the lows to the highs. Also, silver started its rally in October, which was far ahead of gold, which didn't bottom out at a triple bottom of 1621 until November. November the 3rd marked that last bottom, and from there it just shot up.
Hmm.
So I was asked in an interview the last interview that I did with Kitco for this year, what he wanted to know the most important aspects of what I was witnessing over this last quarter,
Right.
and it's how silver was so much more dynamic than gold, and its performance almost doubled that of gold, which is typically not the case.
Mhm. Now I'm pulling up your short-term chart that you sent me just before we started recording. What are we looking at right here?
If that's when you're sharing, that's our long term. It's a weekly.
Okay.
If you want to switch to the other one, I can, or we can work with this one.
Yeah, let's go with the long term.
Okay. The most important question people want to know is whether or not silver next year will break above or make a new record high,
Right.
which is an interesting question for silver because over the last few years, the record highs have been about $30. But people that are as old as I am remember it hitting $50 an ounce on two occasions. Once
How
when the
excited were you? Sorry for cutting you off. When it hit 50
what
bucks.
the first one when the Hunt brothers came in is what got me involved in the precious metals. My focus turned to that because I was so excited. That a small group could influence a market that much,
Hmm.
and their subsequent fall from earth and burning like the phoenix, so to speak, they weren't able to be successful, but they moved it to $50 an ounce. And then when we had, if I'm correct, the all-time record high of 1920 in gold that occurred mid 2011, we did get silver running close to $50 at that point. However, in the most recent new record highs in gold, silver would top at 30 rather than 50. And so from my subscribers that ask me questions about silver is if and when it will ever reach $50 again.
Right.
And it has been an interesting journey, so to speak, to look at how silver, which is outperforming gold in terms of the percentage basis, but has yet to match those $50 per ounce days. And so why is that? And I don't really have a concrete answer for that. But as far as the chart that you just put up, I'd like a second to explain it, and then also to show you where I believe silver could go next year, and then we can move on to any question you have.
Yeah, of course. Here, let me pull up. So you want the long term or the short term?
The long term, the one you just had up. Okay. On this chart, you see three red lines. The first one going back to just before April at $11.73 up to $30.27. You see that box, the high and the low.
Right.
So we use that as a benchmark wave or level. I'm labeling that as a wave one.
Okay.
And then it moves into a multi-month correction from about maybe March of 2021 when it hit the highs at $30, and then goes down all the way till October to the lows that come in at $17, right? And so now we're looking to ascertain where could it go next year. And the technique that I use is called a Fibonacci extension. And I used it because it's proved to be extremely beneficial. And the whole thing about a Fibonacci sequence is there's a strength in that. So what I'm doing is then using the distance between the two red lines on the left of the screen, meaning $11 to $30, and then beginning the extension at 1739, it's where it says 2. Right. I then say, well, where would it go if it extended 1 to 1?
The 35.
35, call it 36. If it only had a 61.8% extension, which is the first black line at 2885.
Right. And
then my arrows are showing you that I believe we could easily test near 50. 4740 is my high end. That's at the top of the screen. Middle of the screen is 42, and the bottom is 36. And that's the area I think we could see over this next year to year and a half. Year to year and a half, I'm looking at silver possibly retesting 50. My numbers come really close. They come in at 47, and that is a lot closer than it has been for the last 15 or 20 years.
Now let's talk about was it the long term or the short term? This is the short term.
And the easiest way to look at it is I use a daily chart. The longer the cycle is, the farther out we're able to project.
Right.
Okay. So what I'm looking at, this is simply the last leg of the rally that began here in September 1742 up to these recent highs at about 2450. And I've created what is called a Fibonacci retracement. And typically what we're looking for is, unless a market's parabolic, it typically will go up $1 and then give back some. So it might go up $1 and give back 20 cents, or it might give back 30 cents to 70 cents, and then return to an upward momentum. If you ever looked at stock charts or any chart, there's a series of ebbs and flows, peaks and valleys. We, in the industry at least, those that believe that Elliott wave theory and Fibonacci have some relevance, look for retracement to fall at certain key areas. The key areas that we look for are recent tops or bottoms, as well as Fibonacci-based numbers. So all we're doing is saying that if it retraces by 23.6%, if it can't break above 24.50, and it does start to correct. If it takes the cue that we've seen recently, which is very shallow corrections, in other words, it goes up $1 and it gives back 23 cents. And then it goes up another $1 and gives back 23 cents.
Right.
That would be the area that I would look for if it can't push through this. Eventually it will, whether it has a correction first and then moves higher, or it forms like a base of consolidation and then breaks to the upside. Obviously, I'm bullish for both gold and silver next year. Gold is also doing that. It's forming the space at around 1,800 per ounce,
Right.
and it's running into resistance at about 1,840. And so it's challenged that. And the most important thing on that, on a gold chart, is the fact that the 200-day moving average is serving to lend itself as a point of support. If you can put that daily chart up on the back, the one other thing that I'm very impressed with silver, you'll notice that I have two lines.
Right.
The red line represents a long-term 200-day moving average. The short term is in green, represents a 50-day. You can see the naming convention up on the top left. Yeah. And so recently, say within the last week, we have a golden cross, which is a very, very strong Western and Japanese technical pattern that maintains that once you get that short term crossing above the longer term, first of all, it tells you that the market will remain strong to the bullish side.
Okay.
It also is moving the moving averages into what I call full bullish alignment.
Now, are the problems now harder to fix compared to the Volcker era, like with what Powell's going through? What's your opinion on that, Gary?
Exponentially harder. There's wild cards that no one's ever dealt with, which is that we had a global lockdown due to a virus that changed the world as we know it. I mean, I'm in my 60s. I'd like to think I'm younger, but I'm not. But I'm in my 60s. And never in my life have I gone through a period of time where entire economies shut down. Absolutely crazy. And that's a black swan event. I mean, if you look at black swan event in Wikipedia, it's going to show that period of time, I think. In other words, Volcker and Bernanke were financial problems, the banking crisis, the housing bubble. And these things were created by either greed or foolish moves by men.
Absolutely, yeah.
This particular instance, it was fueled with something we've never dealt with. And that's the key. The key is there's no historical reference that we can pull on to say, well, the last time this occurred, this is what happened. Because you'd have to go back to the Spanish flu, and it was just what they do. Well, they watched people die in the streets. They didn't know what to do. So this is the first time society has tools to attempt to not alleviate, because that's a whole other question, but to temper the effect. And they're throwing everything they can at it, which brought us to the point of they threw so much money at this problem. I mean, in terms of the federal aid, in terms of all of the money that was spent and the increased budget deficit, that it was a phenomenon in which each currency was on a race to zero. All the fiat currencies were devaluing themselves by necessity to support an unreal scenario. So do they have it tougher now? I would have to say yes, but I don't know how they felt, like whether it was Bernanke or Volcker, which was the last two really spikes of inflation. They might have considered it to be the hardest thing they've ever tackled, but it's unique.
Are there a lot of people are saying that there's some similarities, Gary, from now to the 1929 stock market crash? Are you seeing similarities there, or where do you see similarities, like to 2008, or like what are you feeling?
I think this is the biggest thing that society has had to try to deal with and actively bring back to some sense of normalcy since the Great Depression.
Now, what are you stacking? Are you stacking silver, gold? What are you buying now,
I
Gary?
wish I would have had my kids bring down. I've been actively buying kilos of
Oh,
silver,
nice.
and then I've been buying some 1 ounce rounds, but I end up giving them away to my kids as presents and to my very good friends because they're beautifully packaged and they're just Liberty dollars. Which brings me back to me being a kid. I used to get a Morgan dollar every week from one of my favorite aunts that's no longer with us, which is probably where I got the bug in the first place.
Wow, she planted the seed of the silver bug.
Yeah, she definitely did. But see, back then, a silver dollar was a dollar, and
Right.
it was just as easy to spend on candy, which was the foolish thing I did with it. So I've spent the rest of my life trying to make that up.
That's hilarious. Well, thank you, Gary, so much for coming down to Wall Street Silver and talking to everything. And we hope to have you back soon, hopefully as everything unfolds in 2023.
Absolutely. It's always a joy to speak with you and to address your audience because the members that follow your advice and that collectively form this network are acutely aware of the difference between hard assets,
Hmm.
fiat currency. And that's something that everyone needs to be aware of. So you guys are ahead of the curve. And that's why I will always take an opportunity, if invited, to join you.
Yeah, we truly appreciate it, Gary. Don't worry, 2, 3 months, we'll have you back on.
Well, we'll see you next year, in other words, huh?
Yeah, exactly. See you next year.